Hello and welcome to the podcast. I'm Tanya Tracey, the CEO of Gain, and I am delighted to welcome Gabrielle Boyle of Troy Asset Management onto the podcast this week to talk about all things global equity. Gabrielle is Investment Director and Head of Research at Troy Asset Management. Troy is a privately owned independent investment boutique, and Troy are one of the founding sponsors of Gain. So we're super delighted to have them on board today. Gabrielle graduated from the University College Dublin with a BA in History and Economics and an MA in Economics, and has 33 years investment experience. She has managed global equity portfolios since 2000 and joins us today to talk about global equity and what it means. Gabrielle, welcome. Thank you very much.
Thank you, Tanya. Thank you very much for having me. It's lovely to be here.
So we're here to talk about the basics and learn the basics of global equity. But before we get into that, can you give us a quick whistle-stop tour of your career to date and how you landed in your current role?
Yes. Well, as you say, I've been doing this for quite a while. I started in 1990. I'm originally from Ireland. I was thinking when I was preparing for this, I have been working quite a long time, and actually I've worked since I was very young, so I always wanted to be financially independent. And I finished my education in Ireland, and then I came to work in London. At a very, very interesting time. The wall had come down in Eastern Europe. It was actually just at the time of the first Gulf War. It was also just before Margaret Thatcher resigned. So it was a very interesting time where the world was changing very, very rapidly. I got a job in investment management. I wrote to lots and lots. I mean, I was applying from Dublin, wrote to lots of different financial companies. I had worked doing admin jobs in the City of London when I was a student. I wrote to a lot of different companies, mostly no thank you, but was offered in the end 3 jobs and chose to work in investment management because I really felt it was probably the most suited and the most interesting of all of the jobs. So I've had a very, very long and fulfilling career working in investment, originally European equities for many years, and then in the early 2000s broadened out to invest in Japan, other parts of the world, emerging markets, and then the US. So joined Troy later on in my career 12 years ago now, and was delighted to join a smaller, more entrepreneurial business which had a very clear investment philosophy, which I felt very strongly about. And it was lovely to work with a smaller group of people who had very strong views about how they wanted to manage and look after clients' money, and where there was very clear alignment in how we do things. So I manage a global equity portfolio and love it.
So maybe this is the point where you tell us a bit more about what global equity is, why investing in global equity funds is a good idea, and maybe if there are any risks involved in doing so.
Yeah, so equities, in the sort of purest sense, the way that I think about equity investing and think about investing in is that essentially you're buying a piece of a business. I mean, that's the way to think about it. It's a listed business, so the price is quoted every single day, but ultimately you're buying a piece of a business. I would encourage your listeners and the students to take the time to read, go online and look at the teachings and writings of Warren Buffett and Charlie Munger and Benjamin Graham. Honestly, even if you never work in investing, but you're just for your own investments and savings to view, you'll learn so much. But that's the way I think about it. I don't think about it, and we at Troy don't think about it as, this is not gambling or betting that, like you would on a horse or a sports event. This is about investing in a business that you can understand, that makes sense to you, that does something that you can understand, and where you believe and have confidence that that business is going to grow and thrive over time. And then crucially, trying to understanding what you're being asked to pay for it, what the valuation is. And so from a sort of simplistic point of view, what we do is we invest in businesses that are really pretty fundamental to our lives. So things from the food that we eat, companies like Nestle. In the case of our multi-asset funds, that you'll be familiar with Nestle's products, or L'Oreal, which makes, cosmetics, and through to healthcare businesses like Roche, which have got one of the most extraordinary franchises in biologics and treatment for cancer, through to technology businesses like Google. And we're talking today on a Chrome browser, which is of course one of Google's very important businesses. So we're not looking to kind of invest in dramatic turnaround situations or something that's trading at a tiny percentage of its book value, and you think it's cheap, but it's perhaps not a very good asset. We don't invest like that. We invest in very straightforward, understandable businesses that we think we can invest in at a fair price, that we're going to hold on to for a long time. We invest in companies for 10 years plus. Short-term gain. This is about starting early and being patient. And you will get ups and downs. It's not without. Equities are one of the more risky asset classes. They're one of the more volatile asset classes. You will get undoubtedly big ups and downs, and you'll have seen what happened to stock markets last year. So if you want to, if you think you're going to need the money next year, then equities may not be for you, but you need to be in it for the long term.
And as a global equity fund manager, if there's millions of companies you could potentially invest in, how do you narrow it down, and what's your sort of starting points for deciding which companies to focus on?
Yes, absolutely. We have theoretically a very large opportunity set. In practice, we narrow that down to less than 200 companies that we think sort of make the cut for what we're looking for. So we're looking to own businesses which are very resilient, are very profitable, very strong balance sheets, are well managed, generate a lot of cash, and are in industries which we believe are not very cyclical, not going to change dramatically if we have a slowdown in the economy, etc. So that narrows it down. And we also like to invest in liquid businesses where we can buy and sell the shares with relative ease. So that's kind of a way of sifting through it. And when it's like anything in life. If you have a very clear idea of what you're looking for and you're quite discerning, that narrows down your opportunity set quite quickly.
The Trojan Global Equity Fund is one of the more popular global equity funds out there. Why do you think it's been so successful? And, what are sort of the key USPs, if you like, of the fund?
Well, it's a very competitive space we operate in. So I think Troy overall as a business has been successful because we have, as I said, a very clear idea of how we want to invest. We really respect the authority that's been given to us to look after our clients' money, and we really seek to protect and grow that over the long term. And that, as I said, having that strong alignment with our investors is really fundamental to what we do. But I think one of the keys to success is really keeping it simple and treating other people's money as you would your own, essentially, and having a very clear sort of discipline, knowing what you're aiming to do. We operate in an investment. I mean, in society generally, is very noisy these days. There's a lot to distract us. And actually, what we try very hard to do is to not be distracted, to focus on the job in hand, to do our homework, to look at the companies, to kind of get our conviction very sort of organically from the bottom up. And I think that frankly is different. Having that patience. The typical company that's held in the global equity fund is the turnover is less than 10%. So that means that companies are typically held for longer than 10 years. So that's a long time. Most people don't have the patience for that. Whereas we do actually have the patience, and we're happy to spend our time studying, reading, getting to know, meeting with management, and that kind of thing, and just taking our time.
And what do you think has changed the most in the last decade, for example, with global equity? What changes have you seen over the decade?
So this is a job where you're dealing with change all the time because you're investing in companies that are operating in global economies. It's a living, breathing thing. So we're constantly dealing with change. We're constantly having to navigate through macroeconomic challenges or geopolitical issues and societal demographic factors which influence the way in which we all behave commercially and as a society. But I think that, and that's one of the things that makes this job so fascinating and so interesting. Again, for your listeners, it is never boring because you're being asked to understand everything from the macro to the micro of truly trying to understand businesses at a very granular level, and it's extremely challenging. I was reflecting on this. I think that the two things which I would say today that have that are big sort of structural changes which have impacted the asset management industry or the way in which we think about things. The first is undoubtedly technological change. I'm old, so 10 years ago doesn't feel that long ago. But actually, if I think about where we are today versus 10 years ago, the percentage of revenue for our companies that's transacted over the internet digitally today compared with then is dramatically different. The role that technology plays in terms of the way in which business models have evolved, moving to the cloud, for instance, digital payments today is obviously a much, much bigger percentage of total commerce. Much more of our consumer expenditure is transacted in a digital way. The way in which we interact with computers today, the services that we use, the pandemic obviously acted as an accelerant for that. We're speaking online today. That's a relatively recent thing, that the way which we're communicating. We didn't do that so much even just a few years ago, and obviously it's transformed the way we operate. So, and that has had profound implications for business models that we invest in, even for those which have been around for over 100 years, as well as create new business opportunities. And so one of the key things that we look for when we're investing in businesses is, one, we want the resilience that they can survive in different types of environments. But the second thing is that they have the ability to adapt, and that they have the ability to continually, again, a little bit like sort of the natural world, evolve in a sort of Darwinian way with their environment. And not all companies can do that. And so we look for businesses that are investing in them in terms of R&D, and are open enough to accept that change. So that's one of the overarching huge factors that we live with. And it's not just been 10 years, it's 10, 20, it's 30 years, but it's been particularly fast and rapid in the past 10 years. I think the other thing which would be very relevant for the listeners of your podcast and for the members of GAIN is that of the way in which we as investors are accountable for our actions. This is often classified as ESG, but effectively what it is that today we as investors and managers of quite large pools of capital are held accountable by our underlying investors, by our regulators, and by other sort of stakeholders in ways that perhaps wasn't so obvious a number of years ago. We've always cared about corporate governance. We've always cared about wanting our companies to be good stewards of capital. But the sort of requirements upon us and the way in which we think about that today is different. And we can all witness the issues in terms of the environment, but also, in terms of society more broadly. It's incumbent upon us to hold our companies to account around these issues in ways which we perhaps wasn't such an active part of our day-to-day life as investors and analysts. And I think again, it's one of the reasons why, frankly, we're big supporters of GAIN, because we really believe we need more female investors who are part of this conversation, because we tend to care quite a lot about these things, and it matters. So I mean, I could go on. There are lots of other things, but for me, I think those are the two overarching forces that have had a big impact on our day-to-day lives as investors.
And leading on from that, in terms of a lot of girls that say to us that they think that investing is sitting in front of a spreadsheet all day, every day. You touched on this earlier in terms of meeting with management and company stewardship and everything. How much time do you spend meeting with management teams? How important is that as part of your investment decision-making process?
So the answer is it's very important. And again, I think this is a really important message for students, that there are lots of people who work in this job who are highly numerate and have studied STEM subjects and, of course, that's wonderful and very important. But actually, it's much broader than that, because you, as an investor, there are all sorts of things that are required, frankly, and meeting people, being able to navigate your way through the kind of psychological aspects of things is almost just as important as the numbers, if you like, your temperament. So it's kind of a balance of, you've got to be numerate, you've got to be able to make sense of the numbers, and that's got to be a kind of critical part of the discipline. But equally, you've also got to be quite analytical and be able to absorb a lot of information and make sense of it, but equally be able to focus on what's most important. But you've then also got to kind of have the emotional intelligence, almost, or the sensitivity to understand when perhaps maybe what you're hearing isn't really true, or maybe they believe it, but actually there's something else going on. And there's a lot of unspoken things that can come out. And so it's fascinating in that it does call upon all the senses, and all the sort of different parts of intelligence, I guess, to an extent. And so the human aspect is really important, I would say. Very, very important. There's lots of really, really super bright, incredible people who don't necessarily make great investors. Of course, there are lots of not very bright people who also don't make great, but you know what I'm saying. It's just not straightforward, but you've got to, it's a balance. And I think my experience from being working as a woman in this job, you know, a lot of I've got 4 children, and I often think that actually a lot of the work that I do bringing up my family puts me in good stead to manage money and be an investor, because you've just balancing lots of different things at the same time.
I think that's great advice. It's certainly something that's a hot topic for us at Gain, to encourage students from all different degree disciplines to consider investment as a career. It doesn't need to be a
Absolutely.
finance, maths sort of degree entry. There's lots of different ways in.
Actually, on that point, I remember reading that Edward Bonham Carter, who ran Jupiter Asset Management for a number of years, he did a study where he looked back at the academic backgrounds of some of the most successful investors that he'd encountered in his career. And according to him, the common subject actually was history that they'd studied.
Really.
So, which kind of makes sense in many respects. But yeah, we're pretty open-minded.
And so I guess just to finish up then, what is the best career advice? And it's great advice that you've given us now, but in terms of career advice that you've been given in the past, what is the best piece of advice you've received? And would you still offer this advice to young women today?
Yeah, well, again, I thought about this, and if you'll allow me, I think there's 2 things I would say. I think the first thing is, I think one of the best pieces of advice I've been given in life generally is just show up and keep showing up. This is a thing. This is a thing for us women as we go through our careers and our lives and our families, and just there are times when it's really hard and you feel perhaps you're being left behind because of all the other commitments you have or other challenges. Just put your head down and just keep going, and show up and enjoy it. And that might sound obvious when you're very young, but actually be amazed if you keep showing up, good things happen. But I think that the second thing, which honestly I can't underestimate the importance of, is that of the power of compounding. We all learned about compound interest when we were kids at school. Honestly, you know, power of compounding is I think it was described as, I don't remember exact words, but basically, one of God's gifts. And you can think about it in terms of the compounding power of investment returns, which is how we think about it in the context of our fund and the way we invest. And we believe very strongly that those businesses that can compound at very high rates of return are constantly underestimated by the stock market. You can think about it in terms of your savings. If you start saving young, and the power of compounding will work in your favor and be wonderful. One of the reasons why Warren Buffett's got so much money is because he started early, and then you build up, and then you've got a bigger pot, and compounding on a bigger pot makes an even bit, etc. But actually, it's also compounding in your behaviors and doing lots of small things well and doing that consistently becomes one good thing, big thing that you're doing well. And we know that in our lives, if we eat well, if we try to stay active, it mightn't be a big deal each day, but you to keep doing that, it matters. I think the other thing, which might sound a bit trite, but actually I take really seriously, is the power of compounding in terms of goodwill. And this matters an awful lot in our world, where, and in any line of business, is relationships really matter. And so the compounding of doing good things actually comes back to you. If you go out of your way to help others in this business, whether it be helping them understand how to find an answer to a problem, or helping them get it introduced to somebody, or whatever it might be, actually you'd be amazed how that also builds up, and that builds up with all your relationships. And I would encourage your students to think about that when you reach out to people. If you've gone to a good talk and listened to somebody, and actually just to reach out to them and say, thank you very much, I really enjoyed that, you'd be amazed how that comes back at you in another way in the future. So those are my two things. Keep showing up and remember the power of compounding, because it's magic.
Excellent advice. Thank you very much, Gabrielle. It's been great to have you on the podcast today. And thank you also from Gain for supporting us. And we wouldn't necessarily be here without your support. So it's great to have
Well,
you.
thank you to Gain for your excellent work. I think I wish that when I was in the earlier stages of my career, that I'd had an organization like Gain around. I think it's so much needed what you're doing. I'm an absolutely huge fan. I'm sorry I don't give more of my time, but I really think it's fantastic, and wish that we could just encourage more young women to do this as a career, be interested in it just for their own personal lives, and I think it's fantastic. So please keep up the good work.
And I think anybody listening today will be super inspired by everything that you've said. So thank you very much for your time.
Brilliant. Thank you. Bye.